were working on his credit. Because again, it wasn't a matter of him being approved or not. It was just a matter of getting the best deal. So I pulled his credit last week, and his score went up to 698. His wife's actually went up to 720 something, so she's got bragging rights. But we were able to reduce the mortgage insurance, and we ended up saving him about $1,200 at closing, just for the rate. And then also the payment, I want to say, was about $250 to $300 less a month from when he signed up 30 days ago. So those are the kinds of things that, we try to do just by helping people.
The Haitian Kings. The Haitian Kings. The Haitian Kings. This the Haitian Kings Podcast.
Welcome everybody to another episode of the Haitian King Podcast. My name is Vadim Hector, and we got Richard as my co-host today. So the guest we have today, before I even bring him on, but I wanted to bring my intro, saying what is the most important thing when you're buying a house, right? Some people would say having the money, but for me, I would say is having the knowledge, because there is so many stages you have to go through. So how do you know how to get there? You're probably going to have to go on Google, probably Google it. Sometimes you got too many information. You don't know where to get there. So this is what we do on the show. So we're going to ask my guest today all these basics question, what you need to do when you're buying a house. And without further ado, Cody Heard. Thank you so much.
I'll cheer for you, Cody.
Thank you.
Thank you so much for coming to the show.
Thanks for having me.
All right, so before we even start, for the people that don't know who Cody is, who is Cody?
Yeah, so it's a local guy, born and raised here in Lake Charles, Louisiana. Tried to get out of the small town, but tried to move to a bigger city. It just kept sucking me back in. So kind of fell into mortgages as an accident, like most people do in this profession. Didn't grow up, saying, I want to be a mortgage professional when I grow up. But basically, I was a student pastor at my church, and mortgage broker went to the same church as me. And when I graduated in finance, he said, well, what are you going to do with that degree? And I was like, man, I don't really know. I think I'm going to move to Houston, kind of work my way up the corporate ladder at a bank somewhere, see what happens. And the guy just leaned over. He said, so you graduated in finance? I said, yeah. He's like, man, have I got a deal for you? And so that's how I was introduced into the mortgage. I didn't even know a mortgage had a T in it. Whenever I first started. So I didn't know what it was, but started. I didn't have anywhere else to go, so I started that, and I've been doing that for the past 18 years. So doing mortgages, and yeah, I'm loving every minute of it.
So the question is, did he really have a deal for you?
Yeah, the deal was, I want you to come work for me.
And you've been with that guy ever since, or he just?
No, I started my career there. I was there for the first 5 years of my career before I started out on my own.
So what is a lender do? What is a lender?
So you have different lenders, right? So if you want to go buy a car, that's a certain type of lender. You can go to a bank and they can loan you money for stuff like that. There's different types of loans that you can get. So what I am is a specific mortgage lender, right? So I don't loan you money for a car or anything like that. I strictly do mortgages. So if you want to buy a house, that is all I do. So I decided to hone in and specialize on that one particular avenue is mortgages, home buying. So with that, basically what we do is we meet the customer and we just kind of give them an interview, which we call an application, and we advise them is basically what we do. We become mortgage advisors, not just loan officers. So what I do is after the application, I'm able to ask them questions and pull from them, like, what are they comfortable with? So I always pre-approve or pre-qualify people a couple of different ways. I'll do it based on their comfort zone, meaning, hey, you tell me what payments you're comfortable with, and I'll tell you what price point you need to stick around to keep your payments where you want them. That to me is the most important thing, is advising them on not overspending and not overextending themselves financially, because that's an easy thing to do. And then also what their max is, just so people like to know, right? What is, okay, I know that this is my comfort zone, this is what I need to stick around, but if they're going to look at houses and they don't see anything in their comfort zone, they need to know that they could go up, right? If they found that dream home, I like for them to know that they could go up to that. So, man, there's a lot of different points that we touch in their lives. Like we talk about credit, we talk about income, assets, and it's really just getting what their goals are and trying to align the mortgage product with their goals.
I think, Vadim, you said this early when you were introducing Cody, is like having all the knowledge, right? And I always say we really wear the hat of an advisor because that's really what we're here for, right? And I always had the notion that I don't need to know everything, but I can call Cody. He's in lending. Cody knows everything, right? I can call Vadim in whatever that profession is, right? But Cody, and we talked about this a second ago because I told you I had a lead for you. What's the first thing? I call you up and I say, hey, Cody, Vadim referred me to you. I'm looking to purchase a house. Now what?
Yeah, so we set up a first call. We're very intentional with scheduling that first call and me having a blocked time where I'm not distracted. One thing my dad taught me whenever he said, son, if you're going to go into the people business, you have to give them your undivided attention. Otherwise, they can read into that and they'll just move on. So that's why I prefer that people schedule the calls, just like when you're in a doctor's office, right? So if you're in a doctor's office, you don't want the doctor to be checking his watch and his phone and the nurses are like, what's going on in the break room? Like, no, you want your doctor's attention right there because this is the time you have, like, hey, this is my time slot. Listen to me. And, so we try to do that. I'm trying to be very intentional with that first 15 to 45 minutes conversation. Really listen to them. I take notes every time I talk to someone. I very rarely talk to somebody about their application or numbers when I'm in the truck. It's just very intentional, right? So I take notes and I ask them all the questions. And then from there, we'll take a loan application from them if they're ready. So look, we live in the 21st century now, so you can take an application over the phone. You can take an application online. We can do it in person, all kinds of ways. Before COVID, I used to meet every single person face to face. But now I just get to meet people at closing pretty much because I still go to my closings. But that is actually good. I'm glad that technology has grown that way because people just are expecting more convenience. You still get to work with a local lender, but you also have the advantage of all the technology. We have the same tech. So if somebody wants to take an application over the phone, that's actually what I prefer because we get to ask questions and dig into their lives a little bit as we go through in a kind of more of a conversational format. But if they want to do their application online, like when their spouse is home, they can do it together. Then we get it, we upload it, and then we call them anyways and just kind of go over it and make sure we fill in the blanks properly. So that's the first step, is to do a loan application, which is just very basic information, right? Name, date of birth, social, location, where do you work, income, situation like that, stuff like that. And then what we do as a lender is we like to trust but verify. So we're going to send them a welcome packet. We're very boring in our process, but we're very consistent in what we do because we don't like surprises unless they're good surprises, right? So we'll send them a welcome packet with a checklist of documents to get together. We email that to them. And the welcome packet has a few things, but one of them is like do's and don'ts or frequently asked questions. We'll send those to anybody that wants it. You don't have to apply to get that. Because if you're just in the knowledge stage right now where you're trying to collect information, we can even, look, I'll even send it to you. You can attach this in the link if you want so they can click my welcome packet and see some do's and don'ts. Very important because when we take it for granted because we do this every day, right? But if you've never done this, I didn't know that I couldn't go buy a car before closing. No, I couldn't get married. Like I literally had a customer go get married like 2 weeks before they closed just last month. I was like, you didn't read my packet, did you? But
wait, back up.
Yeah,
how did that affect them?
What, the fact they got married?
Yeah.
How did it affect their loan?
Yeah.
Okay. So we won't get too much in the weeds here, but there are different types of loans. And now some of them, some loan programs, you can get married. We still have to know because we live in a community property state, right? So what that means is...
So wait, they didn't tell you they got married? So you just...
No.
Oh, you gotta love it.
Yeah, exactly. So we found out, well, title told us. So we found out at the last minute. Thankfully, we were fine and we were still able to close. But there was some last minute stuff that had to happen there. So we tell them, like in our welcome packet, don't get married. Or if you do, tell us, so we can congratulate you. But yeah, so we send them that. And then one of the most important documents that we tell them to go to is the checklist of documents to get together. So being the first stage, we see that you put all your information in here, but we also want to verify it, and we want to look at it just like an underwriter will, after you go under contract. But we still want to do that beforehand so there are just no surprises. Because the last thing my team and I want is for someone to go look for a house, thinking they're approved, find a house, get their heart set on it, picture themselves there, and then come back to me. Now they give me documents. And then we go to the underwriter and be like, oh, well, your income's not really what you told us it was. And so that's just the kind of thing that we try to avoid by getting that information up front. And so, like I said, we go through the pre-approval stage. We send them back to the referral partner, and so they can go look for houses. And by that point, it's really like we've done our due diligence, right? And so we send a pre-approval letter. So what that means is that the borrower or the buyer isn't only willing to buy that house, but they're able to buy that house. So it just makes for a more competitive offer from that individual to the seller to let them know they're serious.
And you know this to be true. You may know this, but when we get pre-approvals or qualified and they're like, oh, we're working with Cody, like I know they're solid, right? And then you have some lenders, they may say, well, we're working with Vadim. And I'm like, nah, you might want to pre-qualify them again. See where this is gonna go.
I'm always catching strays for no reason, but okay. I want to say this.
I love you.
Yeah, I want to say this is very important too, because for anybody who's watching, so Cody's a lender, Val is a real estate agent. Me, I'm you watching that don't know anything. So this is we're talking with two specialists in that domain. I'm the guy asking the question. Like the dumb one.
That's okay. No, we all learn. Like I just learned something about the marriage, and I didn't know that. It's not in my packet. Yeah. So let's dig into that, right? First time home buyers. What's the biggest mistake they can make prior to even talking to a lender? I've come to you, Cody. I've never purchased a house before, and then you're like, "Oh my God, you did what? Like, what are the mistakes?"
Not listening. Number one, can lead to just making mistakes, unintentional mistakes. A pretty common one is they know they're closing. So we told them like, hey, we got your underwritten approval. We got the appraisal back. Like we're towards the final milestones here. They're like, awesome, we're going to go finance some furniture. Or awesome, we're going to go make this big purchase. And that could potentially blow up the deal, right? If it's a tight deal and we have to do what's called a soft pull at the end. It's basically just like a credit recheck, just to make sure that what we pulled 30 days ago or 60 days ago when we pre-approved you.
You haven't quit your job. You haven't lost your job, like all the things. Yeah. But what about before they even come to talk to you? Because what you're mentioning is in the process, right? Yeah. They do some things. What about before they even come to you?
Yeah, so I'll give you a good example of somebody that just came to me that did the right thing, okay, but there was potentially of doing the wrong thing, but they listened to me and their agent. So the husband was starting a new job, and with that came a sign-on bonus, okay? So let's just say $10,000 sign-on bonus. So they have accumulated a few debts that they wanted to pay off. Now, these people could easily afford these little payments on these loans they were going to pay off. But if they used that money to pay off those debts, then they wouldn't have had any money left over to put towards the transaction, towards the purchase, right? So the real estate agent, before they started doing that, they kind of opened up to her and like, well, look, we have this money. We'd really like to go get a grant or do 100% financing because we're going to take this money. We're going to pay off some debts with it. And then she said, whoa, before you do any of that, just go talk to Cody first and make sure that that's his advice aligns with kind of what you guys are wanting to do. Well, basically, so like the scenario is the buyer or the borrower wanted to go pay off all the debt with that bonus that they got from work.
Yeah.
And whenever I took a look at everything, the type of loan they had to do, they had to have a little bit of a down payment. It wasn't significant, but that $10,000 really would have helped them buy a house. So by listening to an expert first, they did not pay the debt off like they wanted to, like they initially was planning on anyways. And because I showed them, I was like, okay, look, you do have an option. You want to pay your debt off. Here's a 100% option, 100% financing option, but it was pretty ugly, right? It just was. It was more expensive to do. The interest rates were higher for this particular scenario we had to do. I had to get really creative to try to get them 100% financing for them. It's not always difficult, but for them, they just made too much. Anyways, they didn't fit in the box. So she decided, okay, let me think on it. So next thing I know, I get a contract and she still has the bonus money that she's going to put towards the house. And then my advice to them was like, use the money to get you the most attractive mortgage deal, right? And then after closing, you're going to make plenty of money from the new job. So take that and then pay off, do a debt snowball, right? Which is paying off smallest balances first. And then what you paid the first one off, then you go to the next one and you just snowball it. And I love when people are debt free. I'm a total Dave Ramsey guy, right? I teach Financial Peace University. So like, funny being I'm a mortgage lender, but at the same time, like I believe that the lowest consumer debt you can have, a mortgage is not a bad debt, right? There's good debt, bad debt.
Yes.
And I would say that a mortgage would be considered, if there's such a thing, as a good debt. It's a tax write-off. And a lot of people, like, you're not going to be able to save probably what it would take to pay cash for a home. Now, if you do, bravo, but the prices of homes will continue to go up over time. So what this does is this allows you to buy a house at today's pricing, and there's no prepayment penalties for the most part on mortgage products. So you can take, an extra $100. Did you know just applying an extra $100 towards your principal balance every month, starting with payment number 1, would knock about 5 years off the life of the loan?
Yeah, I didn't know.
That's crazy,
I didn't know that till I started doing it.
Oh, you started doing?
Yeah, I've
Cody told you
been
about it,
doing
you
this
started?
for the last 6 years.
Yeah.
I've been put $100, and it's been really helpful. Even when I first bought my house, I didn't know I had
Who was your lender? I know you're gonna edit this out, but who's your lender?
man. I forgot her name.
Can't even remember. That is
Yeah,
shame.
it's been a long time ago. I called her not too long ago. I forgot her name. I need to look up her name on my phone.
The guy or girl?
A girl.
Probably Michelle or Chase.
No. No.
Cody,
I think-
go ahead.
Go ahead. Go ask the question.
Talk more about, because I think when people call you, the first thing they want to tell you is, man, Cody, I got good credit. Okay. And where do you go from there?
Trust but verify, right? So a lot of people are really nervous about their credit, right? Some people are just like willy-nilly, yeah, you can pull it, that's fine. And some people are like, dude, that's my baby. Protect it. You can't pull my credit. Well, that is a pretty important step, right? It's an important part of the process is to seeing what your credit is. And what is credit, right? Credit is an almighty FICO. It's a credit score that tells the bank, like, how have you played, in Dave Ramsey's words, how well have you played kissy face with the bank in the past? It is a lender's way of being able to look at your track record and seeing, okay, if we're fixing to give you a 15 to 30 year debt, how well have you handled debts in the past, right? So credit cards, car loans, have you made them on time? Have you overextended yourself? Things like that. So credit scores are very important, right? So the first thing we do is when somebody comes to me and says, my credit's excellent. Okay, cool. Let me go ahead and just do a soft pull. So we have the ability of doing soft credit pulls.
So Cody, just for the audience, what's a soft pull?
Yeah. So what that is what people get nervous about, and they're like, well, I don't want to ding my credit by you pulling it. That's called a full tri-merge credit report, right? So
or a hard pull.
A hard pull, which is Equifax, Experian, and TransUnion. When I say we could do a soft pull, I pull it from TransUnion, right? And it gives me a score. Now, if it really is good, I'm confident go ahead and pre-improving them with a soft pull, right? Once they start to get really serious about buying a house, we will say, hey, look, we need to do a tri-merge report just for me to issue a pre-approval letter. Again, that due diligence. But we can kind of normally get by with just doing a soft pull for your pre-approval. Now, if that soft pull comes back under 700, that is my kind of threshold there, where if you're in the 600s, I'm pretty sure you can still get approved. That's not going to be an issue. But I want to take that extra step and go ahead and pull in the full tri-merge so I can run it through our automated underwriting system and really do everything that I possibly can up to this point to get you as approved as possible, right? So again, the last thing I want to do is to send somebody back on the streets with their realtor looking for a house and then something come up. They're like, well, how did you not know this before I spent all my time showing them houses?
Yeah.
And them getting their hopes up. So that's typically the difference. And look, full tri-merge credit pool, the ding, if you will, or the number of points you're docked for having your credit pulled, it's not that much. It's like maybe a couple of points. So anyways, it's an important piece that has to be done. So if somebody calls me and are like, I don't want you to pull my credit right now. I just want to talk to you about this. We'll talk to them as much as we can, but I will not give them an interest rate. I will not give them an amount that they're pre-approved for because I have no idea. I'm missing like this huge piece of the puzzle that I don't know what everything looks like.
But what is
and then they ask you, go ahead.
No, I was gonna say, what is the lowest credit somebody have to buy a house?
It's different for different investors, right? So what I mean by that is, let's take an FHA loan, for example. If we're talking lower credit scores, the loan that you typically go to is a FHA loan, which is a government-backed loan. Okay, lower down payment, good for first-time home buyers. It's how I bought my first house. So those credit scores, they actually do not have a minimum credit score. They don't. So if somebody has a 480 credit score, and be like, sweet, I can buy a house. There's no limit. Well, yeah, but investors, those who have the money, have their minimums, right?
Okay.
So your typical bottom is about a 580, and all the stars kind of have to align in that case. So you have to have a little bit bigger down payment. Maybe some of the stuff, the negative credit history was pretty far down the road, things like that. 600 and above, we really don't have hardly any issues. So, but we can go down to a 580 personally, and each investor kind of has their own, minimum threshold.
I know, like, when you buying a house is not a point, like you said, but it's just having credit. They want to know if you really good with money, how you manage money in the past, how you manage debt in the past, and the best thing you can do is just having a relationship with a lender, right? That's pretty much, if you wanted to buy anything, it's just a relationship with the bank, or people with no money you can just have a bank believe in you, and then next thing you know, they give you money, you just go buy everything you wanted, as long as you can manage it in the best way possible.
Yeah. Well, so when you buy a house, it's a little different, right? So we talked about this a little bit, where you have that banker relationship, which is important if you want to go get if you're starting a new business or something like that. But man, things have tightened up so much where credit score is going to matter regardless of the relationship.
Okay.
Your debt to income is going to matter regardless of the relationship. Now, the relationship is important because you want to be able to have trust in that person. Now, there are loans that we can do that other people cannot do, right? So some people you have to be kind of perfect to do it. Well, that's where, having a relationship with somebody that you trust, and there are loans that I can't do that somebody down the road can. And what I mean by that is, like, if you're trying to buy a 12-unit apartment complex, I can only go up to 4 units, right? So for my Fannie Mae loans. So what I do is I refer that to someone so they can get the deal done, right? So that's where a relationship and trust is important. So, but Fannie Mae, Freddie Mac, those are the two big avenues that most loans are sold through. They're going to have guidelines, and those guidelines have to be met. And that is so people like me can't just be like, you seem like a good dude. Yeah, okay, let's do the loan,
Yeah.
So there's just certain parameters and boxes that you have to fit in to do it. But if you don't fit in that box yet, and you got somebody that cares, a good advisor, then, we'll share with you what you need to do to get yourself in a better position. So our motto is it's never no. We don't say no. We just say, hey, not now, not yet, but here's what you can do to get there.
Yeah. I just got a text on the way here. I told you about it. They texted me and said, how much money do I need? And then what does my credit score need to be? That's pretty broad.
Yeah.
But what's your rule of thumb?
So how much money you need? So let me just say the question, what I ask. Okay. So I kind of always hit them with a question. It was like, are you trying to, so when I take an application, I say, do you have money saved up to put down, or are you trying to come out with as little as possible? And those are good ways of saying, hey, do you have money or not? Mm-hmm. And so if they're like, yeah, I've got 10,000 saved up. I've got 20,000 saved up. I want to put 20% down. Whatever they tell me they think they want to do, it just lets me know, okay, they have money Or if they say as little as possible, okay, great. I immediately start thinking of loan programs like first time homebuyer programs, grants that are out there that reduce the amount of out of pocket burden. So I ask that. And as soon as they give me an answer, just with the experience that I have, I know which route we're probably going to go. Right. And so let's just say you answer little as possible. Okay, cool. There are programs like FHA where it's little as 3.5% down. There's rural development, which is 100% financing. There's also like VA loans for veterans. They don't have to put money down either. So 3 great options right there for you to have little to no money down. So what was your other question?
Credit check and down payment.
Okay, yeah, and the credit score. So I normally answer in the 580 range. Like if I got to give them a number and you kind of force me to, I'm like, yeah, minimum score of about 580. And then depending on the credit score, we go, depends on the down payment. So
I know what. So I just see like when you was doing this question earlier, I can see. So when they say, I remember coming from Haiti, and I had a friend of mine who was saying his brother was with a woman that was making like, she had an 800 credit, and she's like, she can go get anything, and she don't have to put no money down. Right? To me, I was thinking like, how's that even possible? But it's like the highest the credit the person have, let's say you had an 800 credit of 780. Can you just, because of that alone, you don't have to put no money down to buy a house? Is that a myth?
it's a myth. Let's see. So like your credit, it's like a 3-legged bar stool. All right. So the one of the legs is credit. So we talked about that. That needs to be at least 580 inches long. Or, and then you've got one that's debt to income ratio.
Okay.
Right. So that's another leg there. And then you got another leg, which I would say is the down payment. Okay. So let's use those as our 3 legs.
Okay.
Credit, debt to income, and down payment.
Okay.
So you've got loan programs that will allow 100% financing or something like that. So that kind of takes care of that leg. Or you can get a gift from a family member. That takes care of that leg. You have the money saved up. That takes care of that leg. Now you have credit. So I've got a 600 or higher credit score. Okay, that should take care of that leg as well. And then my debt to income, that means how much money do I make at my job and what kind of monthly debt do I have, including the new house. So we look at that. Again, we don't want you to overextend yourself. So if that takes care of that leg, if you've got good job, not a lot of debt there, so now you have a good, strong 3-legged bar stool. So if you have the good credit, good debt to income, and no down payment, and you happen to not qualify for like 100% financing loan, what's going to happen to that stool? It's going to topple over. So good credit is great, but it doesn't necessarily mean like now we don't need a down payment from you. That's kind of more of like your car loans and stuff like that. You typically, that consumer financing type stuff with really good credit, hey, we don't need a down payment from you when you go buy this vehicle. But homes are just a little bit different.
Okay.
Yeah, because in the real estate world, it's really more so what can you qualify for, and you can qualify for a program like a VA or rural development loan where your credit score could be really low, 600 per se, right? And you qualify for that based on your income. So now, yeah, we're confident we can get you into a home with no money down. Do it all the time, but yeah, it is a myth as far as the credit scores go.
Mm-hmm.
I mean, do you get people asking you that? Like, well, dude, I got great credit. Like, why should I require so much down? Like, you get that?
No, kind of. What the funny thing is, the people that have really good credit typically have done a good job with their money, and they have some saved up as well.
Mm-hmm. Yeah.
So like they don't hit me with that very much, which we can serve people all across the board, right? So if you've got a 640 credit score and you don't have money, don't feel discouraged, because we should be able to still help you, like with the rural development loan, right? So if you served in the military, a VA loan, stuff like that, a grant, those are 640 minimum credit scores.
Would you say, and this is probably off of our scripting here, but if you get a client and they can qualify for either program, right? VA, FHA, USDA, like they could qualify for it all. Would you direct them in a certain path, or would it depend on like an area or a price point?
That's a good question. So that's where you become an advisor for sure. I don't look at just today. I look at, hey, what is your goals 5 years from now? What's your goals 10 years from now? How long do you plan on keeping this house? That's a really good question to ask that not a lot of loan officers ask, because you living in a home for 5 years or let's say 2 years, and you're going to exit knowing that you're moving, going for work, or you're going to have kids at that point. You're going to want to upgrade. That is a much different way to handle that mortgage than somebody who's going to live in this house for 10 years, right? So those are the questions that I ask. And then depending on what their answers are, then I can kind of advise them a better, like, okay, look, if you're going to live in this house for 5 years or less, you need to go this route. If you're going to live in it for 10 years or more, you need to go this route. That's typically how I'll
I'm
handle
going to
that.
share something with you. And I think you know this about agents, at least really good agents. But when we go and let's say if I have a property, right? And we're getting into multiple offers. Tiffany wants the house. Cody wants the house. Vadim wants the house too, right? So when we sit all the offers down and we see that Tiffany is FHA, Cody is VA, and then Vadim has oh my God, Cody, come on, what's the other one?
It's a FHA VA conventional.
Conventional, right? So he has a conventional loan, but y'all's offers, for the most part, they're all the same, right? Like the apples to apples. What loan do you think we're going to go with?
Conventional.
Why is that? Tell them why, Cody.
Because you believe that it is the path of least resistance. So maybe the appraiser won't call for something that he would maybe call for on an FHA loan or a VA loan, because maybe they're a little more strict. Maybe you just kind of prejudge the buyer because, like, if they're going conventional, they maybe have better credit scores. It's less likely to fall through, right? Maybe they have a bigger down payment or something like that, and they got their stuff together. So I think all things being equal, we should go with this offer. That's what I would guess.
That's what we do. So just for the audience, right? If you have options, especially if you're in the area that you see that it's getting multiple offers, right? Like we had this back in 2020, like, oh my God, everything was falling. Like there was nothing on the shelf. Everything was gone, right? And you was getting into multiple offers. And as agents, we look at those offers and say, man, Vadim actually has just what Cody said. I'm looking at you're conventional, so chances are you probably likely have a better credit score, right, than Tiffany, who only needs 580, right? And then you likely, if you're conventional and you got good credit, you probably have some money in the bank too, right? Which means too, let's say if it doesn't appraise and we have to go back to the negotiating table, then Vadim, I'm hoping and I'm having some faith that maybe you will meet us maybe in the middle, or maybe possibly pay for the difference. So all that being said, yeah, conventional it is.
Mm-hmm. Yeah. Which, that being said, there are, I think, some common myths or misconceptions of your government loans too, especially VA. That's what kind of burns me. So VA loans is for veterans, right? So those
You
are
feel like they discriminate against VAs?
100%.
What?
I do.
Why do you feel that way? Tell us more.
Okay. What are your thoughts on the VA appraisal? If you could choose between a FHA appraisal or
VA are tight. So I'll be honest with y'all. You can edit this if you want to. I rarely have issues with appraisal. I'm just saying. But if we do, this goes back to, like, let's say we have offers and we know that our appraisal is tight, right? Like I've come and listed Cody's house and Cody's like, dude, I want 550 because I'm looking at everything is around us and I know I can get 550. I'm like, yeah, dude, but I can only support it with like one other comp, right? There's a chance, Cody, that Vadim he'll give you 5, but it may not be supported, right? So then what?
So the appraisers, though, that do VA loans are typically your same appraisers are going to do your conventional and FHA.
Mm-hmm.
The guidelines are pretty much the same as FHA. So FHA and VA, the appraisals are going to be pretty much the same guidelines. There is a misconception that VA is just more difficult when it comes to appraisals.
So are you saying that they're not?
I am saying that they're not. They shouldn't be. If they are, it's because that particular appraiser is just nitpick. Yeah.
And this is the other thing too. What conventional is, I've seen where they waive the appraisal, right? Like they have enough data in the neighborhood that they can support it, or maybe that house was sold a year ago, 2 years ago. So again, like your conventional buyer is typically your stronger buyer. So as a professional, if you said, hey, if you had a choice or depending on the circumstances, we would look at that conventional buyer like he's a more attractive buyer.
Yeah, and there's a part on the contract, as you know, where there's an appraisal section. You can hey, this is contingent on an appraisal or it's not, right? So typically, I would say 99.9% of the time, you're going to say if it's not a cash offer, it's contingent on an appraisal because the
Correct.
lender requires one most of the time. But to Val's point, what she was talking about is for conventional and conventional only. If you have a really good buyer that has proven with good credit, good down payment, that they're just typically even reserves in the bank, just like, hey, this person's solid and it's in a neighborhood where homes have sold recently, we don't need an appraisal. We'll waive it. And so when we find that out is whenever we run our automated underwriting system with the property address in there, Fannie Mae has this huge database that's collecting all this information, and it's saying, hey, look, they're good. We're good on it. And you don't have to have an appraisal. Pretty rare, but it's really cool when it happens. And it's typically you could probably have a 680 buyer going conventional, a 680 credit score buyer, and a 780 credit score buyer, both going conventional for the same house, same sales price. And you may have different results where we may need an appraisal for one person and not the other.
So for somebody that watching that don't know the difference between those three loans, just give it a basic, like between the VA, FHA, and conventional.
Okay. So there's four big ones.
Okay.
There's rural development, which promotes growth in rural areas, and it's 100% financing.
Okay.
So you have to fit in a smaller box for that. Typically a 640 credit score is the minimum for rural development. You can't make more than, I want to say, 120,000 when this is being recorded for a family of 1 to 4. And they look at the household income. So not only do you have qualifying income, like which you want to be high so you can get approved for more purchasing power, but there is eligibility income as well. So we actually just closed a deal yesterday where the guy made too much money for rural development. I tried to get him approved rural development. I wanted to go rural development because he wanted to keep his cash, but he just was blessed with a good job. He made too much money. So we had to flip him to FHA, and he had to put a little down payment. So that's the difference with rural development. That's like the last of the dying breed of 100% financing loans for just normal civilians.
Okay.
Then
right,
you have
and mentioned that the house qualified because it was out of the city limits.
Oh, yeah. Yeah. So there's
Yeah.
certain areas. So promoting growth in rural areas means not bad areas, just rural areas. Like this, I'm sure where we are here today is probably rural development. I would have to look at a map. But yeah, it's typically outside the city limits where there's not a lot of growth or expansion. And a lot of people, like around where we live, all these outskirts, like, towns and stuff, it all qualifies. So that's kind of the easy part. Just if you're inner city, probably can't go rural development because it's not in an eligible area.
Okay.
And then you have VA, which is 100% financing for veterans only. So that's people that are serving or have served in the military for a certain period of time. So if they're eligible, that's the greatest loan product ever made. So, but it's only for veterans and active duty. And then you have FHA, which is the closest thing to 100% financing. That one, they don't care how much money you make. You're eligible as long as you qualify. Does that make sense?
Okay, qualified mean what?
Meaning like your debt to income ratio is good. Your credit scores are good.
Okay.
But if you make $400,000 a year, you can still go FHA because they don't care that you make too much money. You can't make too much for it, right?
Okay.
So, and that loan program right now requires 3.5% down payment.
Okay.
So on a $100,000 sales price, you're looking at $3,500. $200,000 sales price, you're looking at $7,000 down payment. Just to give you an idea. And
That's minimum.
yeah, that's the minimum.
Yeah.
You can put more down if you want.
Okay.
And there are benefits to put more money down, but then you have conventional, which is typically sometimes first-time home buyer. If you went first-time home buyer, you have really good credit. Then conventional, there are pros to it. And if it's your first time doing it, 3% down. If it's your second time or however many times, a minimum of 5% down.
Where's the thing that this whole time I'm trying to remember? Like, it's just if you don't put the 20% down, then they charge you to sometimes PMI.
Yeah.
So you can either some people don't know that you can buy your PMI. I don't know which one of those loans that you'll be able to do that.
Conventional.
Conventional.
So yeah, so VA doesn't have PMI. That's why I say it's the greatest loan product ever. You can do 100% financing and you don't have monthly PMI. So basically, to give your audience an idea of what that is, so private mortgage insurance is what it stands for.
Yeah.
So back in the day, whenever you used to have to put 20% down to buy a house, like back in the 80s. So when our grandparents were buying houses,
You think about that? That's crazy.
I know, but they had to put 20% down. But also the prices of homes were a heck of a lot less than what they are. So it's not as difficult to save 20% down, but they would have to do that. Well, anyways, the prices of homes were appreciating over time. People's income and definitely savings wasn't keeping up with that. So there was a decline in home purchases. So the government stepped in and they said, hey, banks, y'all are going to have to let these people buy houses without 20% down. And the bank said, statistically, they are more likely to default and foreclose on this if they don't have a lot of skin in the game. So no. And the government was like, well, let's make a deal, right? You let them put less than 20% down and we will add what's called private mortgage insurance. So just like if a hurricane or a tornado came through and ripped our roof off, what are we going to do? We're going to make an insurance claim, right?
Yeah.
And the same thing will happen with a mortgage company. They're not requiring us to put 20% down anymore. That's a myth, or that was old news. So we can do, like I just said, 100% financing, 3% down, 5% down. And we have that, but we also have this additional layer of risk because we didn't put 20% down. So the bank says, yeah, you qualify, but at the same time, like, we want you to carry this additional risk because statistically, you're more likely to default on your loan and walk away from it because you don't have a lot of skin in the game. So that's where PMI was introduced. And for government loans like rural development, FHA, they typically last for the life of the loan. That's the downside.
Yeah,
right?
that's very bad.
So, but it's also could not be that bad. So like if you, like I told you before, if you're going to live in the house for 5 years or less, who cares about PMI?
Okay.
Right? Because you're not going to live in the house long enough for that to fall off anyways, if you were even going conventional. Because if you're making your minimum monthly payments and you put 5% down conventional, like that may take 10 years, 15 years to fall off. So that's where, like, that's where I, as an advisor, I look and say, how long are you planning on being in the house? And if I can get you a lower interest rate with a government loan, even though the PMI will last for the life of the loan, yeah, after 15 years, FHA may not be the best option. But for the first 15 years, it would save you money. So that's where we look at it. That's how a good advisor should look at it and be able to advise you, not just, hey, what's the lowest rate? Let me go with that one.
Was it good though to buy your PMI beforehand?
Sometimes it makes sense to do that.
That's what I did. So
Yeah. I mean, so you can, so like what most people do, and where I think, PMI has gotten a lot cheaper lately because here's the good news with the guidelines kind of getting a little bit tighter, where you can't just walk in and be like, yeah, you got a pulse, approve them. So like those days are over, but we called that the good old days. But those days are over, right? So what we're doing now is you have to meet these certain criteria and guidelines. Well, what has happened there, it's really reduced the amount of foreclosures, especially since 2008, whenever everything went to crap, right? And the economy just fell apart and you had all these foreclosures happen. Well, even since then, they did away with all the subprime stuff where it's like, just tell me how much you make, Val. Okay, cool. I'll write that down. I don't need to verify it. It's fine. I got you. And so that used to be the legit way of doing it. If you had good credit scores and you could just tell me what your income was. That was before I got in the business, but that's what it used to be. So with the expansion with the guideline tightening, then what we're able to do now is that PMI has gotten a lot cheaper because there's fewer banks that are having to write these claims because people are, defaulting on their.
Yeah, because I think the price it was gonna cost me by the time it hit, because I think the conventional, if you didn't put the 20% down, when you hit the 20% and it's gonna fall off.
Mm-hmm.
But I think it was gonna cost me about like $6,000, something like this. But if I think I purchased it for like $1,500, so it makes sense to me. Than just,
no, that made sense. So to go with what you're talking about is what's called a single premium mortgage insurance. So you can opt to pay it monthly.
Yeah.
But if you have a little bit of money where you could, and you have good credit, things like that, then you could say, hey, look, I'm just going to pay one lump sum as a discounted rate. So you did the math over, it was going to cost you $6,000 to hit that 20% equity, that PMI that you'd be paying. Yeah. Or you say, I'll write a $2,500 check or $1,500 check and just be done with it.
Yes.
Now, how'd you learn about that?
It was my lender.
Oh, your lender educated you.
Yeah.
That's good.
Oh, that's not bad. You might
No,
use
she
them
was
again.
really- she was
if
really
you can
good.
remember her name.
I can't find it on my phone. I just can't remember.
If we find it, we'll edit it out anyway. But yeah, no, that's a really good point, man. And that's the flexibility you have with conventional loans that you don't have with government loans. So, but anyways, here's the thing too. If somebody comes to me, another common mistake that people make is they put too much money down. And I know that sounds crazy, right?
Yeah,
Don't tell Vadim that.
Go ahead. Let the man speak. Let him cook.
Depending on the age, right? So like
Okay.
if you're a little bit older in years and you don't want to have this mortgage for very long, like, yeah, if you want to put 50% down, you go right ahead. I'm not going to argue with that. But if you're young and you have, I still want to invest, I'm still planning on having kids, I'm going to maybe want to buy a rental property or two down the road. Like cash is king when you do stuff like that. So if somebody comes to me, and I will advise them to put 15% down rather than 20% down all day. And it may sound crazy because you're like, well, yeah, but they were so close to getting the PMI taken off. But man, if you do that, you can either do the single premium mortgage insurance like we talked about, which is maybe like 0.5% or 1%. That's better than spending that extra 5% to put down. Or the monthly mortgage insurance, like let's just say on a $300,000 house, it might be $25 a month now. So that's how cheap it is, versus what it was. And so people would just prefer to keep their cash, I'm learning, and just put the 10 to 15% down. And when I show them the numbers, I mean, it's like almost every time they opt for a lower down payment, because it's what drives me nuts is whenever people have all this debt that's a 20% interest rate and 10% interest rates, and they will still want to put 20% down on the house. That's like a 6% interest rate.
Mm-hmm.
Like, no, like put less down here and then take your money and pay off some of this higher interest consumer debt that you have. If that's the
I think that's
case.
what we love most about you, Cody. Like most lenders, they will just focus on can they approve you or not, right? They're not really opening up your finances and really advising you on what direction to go. And I think that's kind of why we connected the way that we do. Because if you can't tell, like Cody, you have a passion and a love for helping people. And I know that because I've worked with you for so long. But let me ask you this, like what's the fastest way that you can advise a client to pick their credit scores up?
It's a good question. Just really looking at where they are. Let's just say they have a lot of collections, past dues. If anything is currently past due, get it caught up, right? Stop the bleeding. Get it caught up to date. Never be late again. That's number one.
Go put it on a minimum payment.
Yeah, you can go ahead, Cody.
Okay. So like a good example is I got a buddy of mine that buying a house, a very nice home, and it wasn't a matter of him getting approved or not for that loan. It was, okay, let me get your credit score up so I can get you the best deal, right? Because better credit equals lower PMI. Better credit means lower interest rates, things like that. And so he was buying a pretty big house, right? And the loan amount was big. So any movement in a higher credit score was going to save him quite a bit of money. So he went under contract because he didn't want to lose the house. And his credit score, let's just say it was mid 600s. And what I did is I ran a report for him and his wife. And I said, if you pay down these 4 credit cards to this amount, which basically what I was doing is I was lowering his utilization ratio down, his credit score was going to go up over a 700. Okay. So I gave him that report. He used some of his money and he paid down that stuff. And I did what's called a quick rescore. So I re-pulled credit. I basically forced the bureaus to re-report and show me the new balances instead of waiting for them to just organically report. So we got him to a 698. Okay, it was really close. But just by doing that before closing, we did this while he was under contract. We were doing inspections, appraisal. We were working on his credit. Because again, it wasn't a matter of him being approved or not. It was just a matter of getting the best deal. So I pulled his credit last week and his score went up to a 698. His wife's actually went up to 720 something. So she got bragging rights. But we were able to reduce the mortgage insurance. And it ended up saving him about $1,200 at closing just for the rate. And then also the payment, I want to say was about $250 to $300 less a month from when he signed up 30 days ago. So those are the kinds of things that, we try to do just by helping people. But that, to answer your question, Val, one of the things that I hit on you get the most bang for your buck is by paying down credit card balances. But
What is your rule of thumb? Like to get it 10%, 15%?
under 25%.
Under 25?
Yeah, under 25%.
But like, I know they got two category of advisors or people saying,
Hey, you still watching, right? That means you're enjoying it. So follow, like, share, subscribe.
all right, let's get back to the show. You need to buy a house, or you don't have to buy a house, you have to rent. So where you stand on that? Is it good for people to buy a house, or is smarter for people to just rent and never buy a house?
Depends on where they're at in life, right? It depends, because I'm not the guy that's going to tell you to buy a house if you're going to live here for a year. Like, I think that you're probably better off renting. Now, like, it depends on the market too, right? Because that's where a real estate agent can really help as well. Is, hey, this is where the values are today. This is where I think the values are going to be next year, or in 2 years or 5 years, whenever your job is done and you're going to be heading back up north or whatever. So, like, I guess as a good rule of thumb, if they're going to be in that home or here for at least 3 years, I think it's probably worth it. Like, when I've done the math on it. But man, I'm that guy. I don't think everybody should buy a house. I mean,
I'm the same way.
I mean, I don't. I mean, I think.
So can you? I would hear his, and I want to hear your. So why nobody?
Why shouldn't they buy a house?
Yes.
Well, it becomes a responsibility, right?
Okay.
So like you're gonna have to maintain that home.
Yes.
You're gonna have there are hidden costs, if you will, that you need to account for that you may not have when you rent.
Okay.
So if you're the type of person that with something breaks, you're not gonna fix it. You're just gonna kind of live with that leak or whatever. And otherwise, you'd rather call your landlord and have them come fix it. I mean, maybe that's not saying that's the only reason you should rent a house, but there's more maintenance, there's more repair costs that are associated with that. And I mean, I did a loan for a lady who kind of regrets buying her house because she feels like she's tied down more, and she was kind of more of a free spirit, so she's already thinking about selling her house. So there are certain reasons for that. Now, financially, I think it's still an American dream. I think a lot of people want to buy their home. It's theirs. They can hang whatever they want on their wall, and they can be as loud as they want.
Children in it, their grandchildren on it. So, but to Cody's point, like buying a home isn't for everyone. So I have a client right now. When I met her, she wasn't my client. She was another agent's client, and she was looking at some new construction I had, and she came back to me. And she was like, hey, I don't know if you remember me, but I was going to buy this new construction home. You were representing the builder, and now I want to sell my home, and I'd like you to represent me. Well, 2 years prior to that, when I met her, I was just asking her just organic questions like we typically do, right? And I remember me asking her, like, you sure you want to buy a house? And the reason why I say that is I knew she was only going to be here for 2 years. I knew she had a VA, and I knew just from talking to her and if we were going to get that deal to work, she was going to roll her closing costs into the price of the home, which means now, and we are literally in that boat right now. She's selling, and it's been less than 2 years. She's bringing $15,000 to the table simply because she chose to. At that time, she had the money. Then she could have put down the closing costs, but she wrapped it into the price of the home, and it just didn't move that much. So, like Cody was saying, when you work with someone who's going to advise you, they're going to start asking you questions. And then one of them may be, Vadim, you sure you want to buy a house? Because after doing like a discovery call, you learn that, hey, maybe I shouldn't buy it if I'm only going to be there for 2 years. Because chances are, I can almost promise you, you're bringing money to closing to get out of it.
That's a good point.
Not to mention all the repairs she's made in 2 years. Yeah.
But
does that answer your question?
Yeah. No,
and we do have there are ways of doing, rent versus buy. Like I have a form that I can fill out that shows this is how much you pay if you rent. And this is how much you pay ultimately after you pay your realtor for when you sell it, and in repairs, like an estimated amount for repairs and insurance and taxes. This is how much you should net off the sale. And what a lot of people like is, man, if I could just break even and honestly just kind of get my money back and I've lived here for free for the last 5 years or 4 years, then that would be worth it to me. And so we have a rent versus buy that we like to walk them through that. Let them make the decision.
Yeah. But it's like I said, it's going to be hopefully if your lender and your agent are doing their job, it'll come up in a discovery call and you'll discover that maybe it ain't my time to buy.
So can you like break down, I know we talked about PMI, but can you break down in simple terms like interest rate and escrow for people that don't know?
Mm-hmm. So repeat the question.
Not just saying like, can you break it? I know you explained what PMI was.
Mm-hmm.
So can we do the same thing for like interest rate and
escrow?
And escrow.
Yeah, interest rate and escrow, two totally different things. But like your interest rate's going to be based on the market, your interest rate, your credit score, how much you putting down, the loan type, stuff like that. Now let me talk about shopping interest rates. So you're like, well, should I go online? Will I get the best rate online? Will I get the best rate locally? Do I go to a bank? Do I go to a mortgage lender like what I do, a broker? And so, I tell people this, if you've shopped 10 different lenders, right, credit unions, banks, on average, you're going to have about 0.25% or 0.25% difference in interest rate between the highest and lowest.
Okay.
Not that big of a difference, right? So, that's number one on interest rates. And always, I advise your audience, it's different for everybody. I'm not going to say that one size fits all, but your 30-year fixed is probably your most common deal. A 15-year fixed, it's fine. It's just like normal. Like lately, as the time we're recording this, there's not a huge difference in the interest rate between a 15-year and a 30-year. So again, I always advise people like, hey, don't put that much down. Hey, maybe don't finance it over 15 years, do it over 30 and make extra payments on it and pay it off early, right? But that way, if crap hits the fan, you're not held to a higher monthly payment, on a 15-year fix because, hey, COVID. You know what I'm saying? Like you didn't know that you're going to be furloughed and didn't work for however long or whatever. So like it was a lot nicer having a 30-year fixed mortgage payment versus a 15-year mortgage payment. So that's just my advice. And that's what I learned from my mentors and finance guys that I talked to is that, and then escrows. Okay. So escrows are totally different. Escrows are going to be, it's basically a fancy word for savings account.
Yeah.
Okay. So in your monthly payment, like let's just take your car, or your auto loan. So you've got your car payment and then you typically pay your auto insurance separate, right? Whether it's monthly, every 6 months, once a year, whatever, however you have it set up, but you pay that carrier directly. Where mortgages, you have the option, but most loan programs, if you don't put 20% down, would require that you have escrow, right? So what that does is it takes the risk from the bank or the lenders that you are going to pay, or the insurance will be paid. Okay. The property taxes will be paid. Excuse me. And so whenever that is on there,
keeping all that in there.
Yeah. That's what make it.
Please do.
We're gonna have a pause, Cody. We're going.
So when you escrow, the lender wants to make sure that the taxes are going to be paid, the insurance is going to be paid. So with that is, let's just say your insurance, it's still done with a third party, right? State Farm or Allstate or whoever you have insurance with, USDA, you can have it with whoever. But the lender is going to want to make that payment for you. So what we do is we include it in with your note. So every time you make a monthly payment, you take 1/12 for 12 months in a year of your annual premium. Just so for easy math, let's say your premium is $1,200. Well, 1,200 divided by 12 is $100 a month. So that means your insurance they're going to collect $100 a month from you each month in with your total monthly payment so they can have enough to pay your insurance company for you every year. Same thing with property taxes. Property taxes where we live are due every December 31st, they're due. So they're going to make sure they collect, okay, if your property taxes are $2,400 for the year, we're going to take $200 of that per month, and we're going to include that in with your payment. So you making one payment, right, to the lender. And in that, they're going to keep those funds in an escrow account or a savings account so they can pay that on your behalf whenever they become due.
Man, you say that. I had a problem with my bank. This is what they did to me, right? So I got a check for like $2,500.
What year? Your first year, second year?
No, I don't remember. Probably maybe 5 years down the line, I got $2,500. So I'm like, I called him. I said, hey, man, I got a $2,500 check. So yeah, that's extra money that, we realize that
overpaid for your
you
escrow.
overpaid. I'm like, I'm not supposed to be spending that money, right? It's like, no, that's all your money, I'm like, again, I hang up the phone, call the second time. It's like, oh no, we don't see nothing in our hand. You're good. This is your money. All right, shit, say less.
So you go buy some glasses.
Oh yeah, I spend the money. Then 2 months later, like my monthly's so high, they send me the escrow money. So now they have to increase. I was paying like what at the time, $1,200 to $1,400 a month. So because now they're gonna pull it back up to the escrow. I said, man,
But why did it go up?
because I have no money. They send me the escrow money.
They recouped what they sent them.
That's what I'm saying. I'm like, I shouldn't be paying this. And I was arguing on the phone. I'm like, yo, that's your mistake. I called like 1,000 times to make sure. And what I'm trying to tell you, I'm not supposed to spend that money. And you said it was okay. Who I talk to? You can never like. I said like, I need to talk. I try not to pay it, but man,
In the end,
I end up paying it.
Yeah, they
All
say,
right,
hey, look, just give it back and we'll call it even.
You know what I mean?
we see a lot too, especially in Texas, is because taxes. We're in Louisiana, so our taxes aren't very high. But in Texas, this happens a lot, where people will go and get new construction houses, right? Yeah. Well, when they were building the house, they only taxed you on the land, which was, I don't know, $20,000, $50,000 lot. So you're paying taxes on that. And they may not catch you till like year 2 or 3, and now your taxes is at a $400,000 rate. And if you're in Houston, like it can get up to like 8 and 9% easy. So that happens a lot in Texas. Do you ever hear about that? Like,
Yeah, but I feel like I should not pay it. I felt like,
You're
man,
still on that.
you made the mistake, and I called, and I already knew it. And I trying to say, do you want me to send the check back? You said, no, it's your money.
You should have told them, hey, take a second. What's your name? Cody? Okay, you got notes, right? Cody, I need you to know that I called and you told me to keep it and spend it.
Yeah.
I was so mad.
Tiffany, you hear about this a lot?
Yeah.
Not a lot. I heard when it happened. But
Yeah, I was so mad because
I agree.
they just like, and I was
You need to
from
put it in the notes.
from 1,200 to like 1,400. Like for what?
But yeah, it went back down though. So like what they
went
did
back
is
down.
it went up for them to recoup the money and then went back down to 1,200, right?
After a year.
Yeah. Well,
Fuck, I mean, you know what I mean? We didn't have all this didn't have to happen.
After a year.
I
that's just called incompetence. That was like they just didn't do the right thing.
And
They
messed
should have
up.
sent it
It's
to
human
you.
error.
What's the other thing? Why like? So I think my loan already transferred like three times already. Why they do that? Like for normies that don't know. Why like another bank just I'm calling it. I got another mail.
That's a good question.
I got a bunch of letters saying, hey, now your loan is with this lender. What's going on with that?
So I don't know if this is the right answer. This is kind of what I think. So I'm the originator, right? So that means I originate the loan and we close it in our name. And then after that, like I can help you, but I can't service your loan, right? So I can't like log in after it gets sold to an investor or a servicer is what we call them. And I'm like, oh, I'm logged in and I see that the escrow, whatever, like you're calling the phone number on the mortgage statement, right?
Yeah.
So that's your servicer. I don't know why they get sold from. Now I know like why we sell them. We package our loans and we sell them or we assign them to a servicer because we're not set up. We need to free up our lines of credit to continue putting the money out there to the borrower so they can buy the house. So these servicers, what they get paid to do is they make money on the interest. So I don't get paid on the interest, right? So they do. So I think what happens though, to answer your question, is if it gets packaged and sold to another servicer and really all you're seeing is a letter that says, okay, now I need to make my payment to so-and-so.
Yeah.
But I think is like, there's a lot of loans that are good like yours. And there's a lot of loans that aren't good. Like they took a chance on and they just weren't that good. So they need to get some of those off the books.
Okay.
So in order to do that, they may have to take some good loans and they put them together so they can have something that they can sell to another investor. Yeah. That's what I think is happening. But that's kind of like,
But how is it good for
secondary.
the other person buying it though? Why save my?
It's just
because nothing
So
changes.
you're an investor, right? So Cody just wants he knows that some of it is bad debt, right? Good, bad debt, whatever. But then you see the opportunity, right? So you're like, shoot, Cody, heck yeah, all day I'll take on that portfolio. I don't have it. I'll take it. So you're an investor. You like the bar that you wanted, right? That guy wanted out, right? And you wanted in. It happens all the time.
And is it good for you? No, it doesn't really affect you except for the annoyance of having to like go set up your payment again.
Yeah.
With the new lender. So it's not helping you, but it's not hurting you either. Once it's set up, it's done. And you might get lucky where your loan never gets sold. Or you might
How many times they sold your loan?
You said 3.
I think that's 3 times already.
There's a lot. What's the next question?
Jeez, I don't know. It's weird though because I feel like, man, every time I've got a new bank, now I got something called cross country, some bullshit.
They changed kind of like we changed though, because you know, as soon as the rates go down, what we do?
Refinance.
Yeah, we refinance. We're going somewhere.
Yeah, let's talk about refinance. So when somebody need to refinance, or is it something you don't have to do, or do you have to do it?
No, that makes sense a lot. And so right now, so there's a lot of people, and the whole kind of reason that houses aren't moving as much, you're not seeing as much of the inventory, is because people are handcuffed, golden handcuffs, into a 3% interest rate, 2.5% interest rate. You know, and then rates went up so fast in 2023, 2024 that like people are saying, they look around and be like, man, this is the house I can have now. If I go buy this house, it's going to cost me this much more because I'm going to have a higher interest rate. So I'm just going to stay put. And if that's the case, well, maybe they want to, if I'm going to be here, I really don't like how that room ends. I want to expand that out. I want to build this pool. I want to do this outdoor kitchen space. If I'm going to be here, I may as well just like make it how I really love it instead of going and buying something that's already done. All right. So that's a good reason to refinance. You can pull some equity out of your home and use it for whatever you want. Like I'm doing a loan right now where this guy has all these bills they accumulated, all this debt, but he's got a ton of equity in his home. So, and he's just drowning in this monthly payments. So we're refinancing his home where he has a ton of equity in, pulling some of the equity out, and he's paying off everything. So he's consolidating one monthly payment.
What rate did he have?
Well, he actually had, so the rate on the mortgage was like low 6s, and I'm able to get him a low 6s. So the rate is kind of like a wash on his house, but it's all these other debts that he's getting rid of, like student loans, credit cards. He's even paying off his cars. He's just lumping everything in this mortgage, and he's going to end up saving like almost $2,000 a month.
Yeah.
I mean, he's just going to be able to breathe again, right? And so, but we've talked about this as an advisor and overstepping or not, but I'm like, I take that opportunity to be like, hey man, why did you get yourself, like, why do you think you got there in the first place? And if it depends on the answer. Like, well, we got sick. I wasn't able to work. I lost my job. Those are typically once in a lifetime things that you got in that position. But if it's a behavioral problem, then that's something you may need to address, because what's about to happen is you're about to free up all your lines of credit, all your credit cards. You're going to have a bigger mortgage payment here. Or are you going to go do it again?
Yeah, you're going to go right back to it.
Go right back to it.
With a bigger.
To piggyback on your question to Cody though, like, is refinancing a good thing? So what he was saying is that like back in 2020, like 2020, when you had the rates at like 2.9, right? Everybody was like, oh my God, I can almost get double the house for what I'm already paying, right? Mm-hmm. So now you have a lot of folks that are in that 2.9 rate range, but let's say they had a $300,000 house, right? So the same house, the same quality of house now could be like $500,000.
Yeah.
I mean, like I got a lot of equity in my house, in this house right now. And
so
I was looking at it.
I can get you a lender and we can sell your house. Is that where we are?
I got a house for you to sell, though. I meant to call you. I'll never call you. We're going to talk about it after that.
So
got your lead, Cody.
To get for refis.
Oh, yeah, that's a good deal, too. It's good.
Refis, cash out. That's what the example I just gave you, right? Cash out for whatever reason you want. Debt consolidation, home improvement, whatever.
Another investment
property is a great way of doing it. A great way of starting investments is by pulling the equity out of your home if you're a risk taker like that. And then what most people think about when they think of refinancing though is just lowering my interest rate, right? Yeah. So like I have this rate and I want to lower it. Is it worth refinancing? Because you have costs associated with refinancing, so it needs to be worth it, right? So my rule of thumb, if somebody were to ask, is about 1%. If you're dropping your interest rate a full percent and you're not pulling any equity out, it's probably worth looking at the numbers, seeing if it's worth it.
I like this question. Why a local lender over your bank or a big bank?
Much better looking. No, I'm just kidding. So local is always the way to go, right? That's what I preach if I'm in Louisiana. If I'm trying to get business in Texas, then it doesn't matter. But the local, it's important relationships, right?
It's
Comes down to
all
everything.
about relationships.
It is. Not that we can choose the appraiser, but we can have a panel of appraisers that we trust and like, and that's not going to sabotage. So like that's important. Local title companies, local real estate agents, local insurance companies. Man, I'm all about using local people, and we're face to face. So you always joke around all the time. You're like, look, he's going to be here. So if he screws up, I know where to go find him, you know? And so when you're talking about like an online lender, you know, won't mention any names, you're going to be shifted around from department to department to department. And so I've been doing this 18 years. I want to do it for another 20 years, right? So like my reputation means everything to me. And I live in a local community with the same people that I'm doing loans for. And I want that to be a blessing, not a curse. So if I'm bumping into somebody
we're
at
running into Cody at Rouse's.
church,
you know?
Target, I mean, you name it. I live with these people. So like, I don't want to be hiding behind the toilet paper aisle if I see these people, you know, like I want to be able to go
Baby,
up to
look
them.
at Vadim coming. Remember we screwed up his loan.
Yeah.
But this is what I tell people, because we get a lot of calls, and the first thing we'll ask them is, hey, you know, do you plan on financing, or would you be purchasing with cash? And if they say that, oh, we're financing, what's the next question? Okay, great. Do you have a lender, or would you like me to connect you with our local lender? We always try and go local. One, because you have the relationship. You know that if you come to me and you say, yeah, I want to purchase a house, and I'm like, okay, are you working with a lender? And I look at your pre-approval and it has Cody on there, you're good to go. I don't have to ask any questions. I don't have to call them and say, hey, did you do this? Did you do that? Because sometimes you work with people, and no offense, because we've all had our first deal, right? But it could be their first deal, right? And you don't know who's coaching him or her behind the scenes. So I don't know if I have faith in that loan actually processing. Or like Cody said, did they do the right work as far as pre-qualifying them? Can they really afford the $300,000 house? Or you thought they could because that's just what they told you, right?
I can say what makes a big difference too is exactly what she said. The pre-approval can be worth the paper it's written on, honestly, because some lenders will issue them and they didn't do their due diligence. So when they do see something with my name on it, I've been doing this long enough. Most people know, okay, they're good. And if they need the extra boost of confidence, I'll call them. I'll call the listing agent and I'll say, hey, you know, I pre-approved them. They're solid.
You do that with me, even though like Cody's my choice, right? But if I have another deal where I'm the listing agent and he's working with the buyer agent, he has a buyer, he's approved them, Cody will call me and say, hey, just so you know, this guy, this girl, they're solid. This is what they do. That like he'll tell me the circumstances. Not like I need it from him, but a good lender is going to call you. They're going to call that agent and say, just so you know, Vadim, like he's solid. He's good to go. And again, it goes back to relationships.
It gives us the warm and fuzzies, right? So if there's like multiple offers and there's the listing agent is presenting those offers to their sellers, and they'll be like, hey, look, I know this is a VA loan, or I know this is an FHA loan or whatever, and this one's conventional. But I know this lender, and he already called me and said they are rock solid. And I just feel like it goes a long way. That can't hurt, right? If you're vouching for your borrowers, for your buyers and your clients. So I think anyways, try to do what they can to give them any competitive advantage possible.
So
Did your other lender do that?
what?
They call a listing agent and vouch for you?
As a matter of fact, it was the other way around. It was
What do you mean?
it was my
The agent that called?
yeah.
Okay,
They
that
vouched
happens
for
too.
me.
Oh, they called the lender to check on you?
Yeah, they vouched for.
I tell you, in Houston, I don't see this a lot here, but in Houston, like we'll go so far as to have the buyers write letters to the seller. You know, because a lot of them, like it's an emotional sale for them, right? They raise their kids there. They had the birthday parties and you walk in the rooms and you can see all the names and how tall they've grown over the years. And, they want to make sure that the next buyers that come in here, they're going to be here the next 10, 15 years. They want to raise their family here as opposed to just coming in and just flipping it. If that makes any sense.
Yeah.
Yeah, I mean, that's too emotional on it.
Yeah, we know you and your emotions. That's why you got that bracelet. Listen, here's the next question. How many times have you ran into people, had conversations, and they're like, oh, no, Cody, I don't think I can afford I don't know if I can afford a house. And then you're like, you know, won't hurt trying, right? And they're approved. Then what? It happens all the time, by the way.
It does. It does. And I mean, I don't know what their expectations are like or what they think has to happen. Like, you are perfect. Like, I don't know why you feel like you couldn't buy a house. And I don't know what myths they listen to or, you know, a story that they told themselves. Maybe they're first generation home buyers that, you know, they never had a family member that bought one, so they don't know what it's like.
Yeah.
Man, one of my favorite stories ever is this girl. Her name is Anna, and she bought her first home, first generation home buyer. Her dad just passed away last year. And when we closed, it was at the old Capital One Tower before the hurricane. And he thought she was just going because they were going to go to like the 5th floor where they had Renee's or whatever the name of that restaurant was. And we're like, we're just going to go eat lunch. And we actually had her closing scheduled.
She brought her dad.
She brought her daddy with her. And like, we were all there, the real estate agent, me and stuff. And he's like, what are we doing on here? And she said, Daddy, I bought my first house today. I'm buying it today. And we're closing on it today. And I want you to come watch this. He just started crying. He was so proud of her. I have a photo of him picking her up, and he just got the biggest smile on his face. And yeah, we closed it, man. So it is an emotional thing. And that's just so satisfying when you see stuff like that. You're like, man, that happened because, you know, a lot of played a little part of that.
Yeah.
And it's just a really cool thing. And so I've kept in touch with her. Like, that's my favorite photo on my phone that I think I have besides my kids and my wife. So like, you know, I saw that he passed away, and, you know, you get these emotional connections in these relationships, and it's just the difference of using local people, right?
Yeah.
I mean, this is your
And
community.
it reminds you of why you got into the business, right?
Yeah. But she was like one that didn't know. She didn't know what it took to
So what
get
happened?
qualified.
Like, did she call you, or did somebody refer you her? And
Yeah,
said,
she was
"Hey,
referred. She was referred by her realtor because she found this house. She's like, I probably can't buy it, but I love it. And it's where I think it has some kind of like connection, family connection to it. And so she started with a real estate agent, which is typical. You know, you find the house, you get emotionally connected to something, and then the realtor's like, all right, well, you have to do the boring stuff first. You got to go get pre-approved before you get too attached to it. And that's where I come in, and I try to, you know, make it as interesting as possible and as valuable as possible. But yeah, she came in and we looked at her stuff, and I was so happy to be able to pre-approve her. And I'm like, you're not going to have any issues.
I mean, even though for me, like, come from Haiti and then buying a house, it was a big deal. I mean, now I feel like it's, you know, I guess as human, after a while, you have it. It's not become a big deal or a taboo. But like, first got here, owning a house was like, man, that's like a big deal. Like, I didn't think I would ever be in a position to do that. You see what I'm saying? But like, buying the house, for a lot of people, you know, it's a big deal.
Oh, it's a big deal, man. Yeah.
You know, but I never like taking the picture stuff and celebrating and I don't do that. But
I don't do closing photos.
you know, I don't do that part. But I think buying a house for a lot of people it's kind of like a status, I would say. Depends of like maybe that sense of accomplishment. Hey, I did something I never thought I would do. But then there's another bill you take on.
How was that for you? Like, you still have family in Haiti, right?
Yes.
So when they learned that you purchased a house, like, was that a big deal for them there? Or they all, like, you come from a generation of family that purchase houses? Because some people, like you said, it's first generational for them.
Yeah, no, but I mean, like, in Haiti, like, you know, people own the house in Haiti, most likely. So, you know, my dad rented, but he's not comparable, but he had his own house. My mom got her own house, but, like, for the United States, it's just like the way people looking at from Haiti, looking at the United States, such as a big country. So for you to come here and then, you know, be able to buy a house, it's kind of like a big deal. You see what I'm saying? So to me, like, when the time came for me to buy my house, and it was a big deal for me, and I didn't know shit about buying a house. Even though I remember,
Knowing you did your research though, right?
yeah, I mean, but I had like I always ask the question because I always like, you know, you got
Tell
anxiety.
Cody, who was your agent again? Tell him.
That's Miss Lofton. I love Miss Lofton, and she didn't even say,
Phyllis too, yeah.
she didn't even buy I didn't even buy the house. She didn't even buy me the house. I didn't even get the house from her.
Oh, that's right, because you got it from a coworker, huh?
Yeah, I felt terrible. and I still love Mister because
So let me tell you, did you feel terrible enough to compensate her?
this is what we're doing now. Damn, bro.
What I was,
But Miss Lofton is really good. After I bought the house, she came in.
that happens a lot though. Remember, I mean, the deal we just closed yesterday. He found his own house.
Yeah, he did.
You know, I mean, I did at the time. If I swear to God, if I knew,
She could have still represented you though. So why didn't she? You remember?
I think I just because I talked with the guy and I feel like I trust him enough, and he said we don't have to go through agents.
Perfect example of so.
Yeah, I mean, I'm just at the end of the day. So
You
I
did an inspection and all the things, right, on the house.
wait a minute, inspection. Oh, you talking about like
You just said
That's
just
always
like
the perfect. Okay, so look, Cody and I just closed a house yesterday, right?
Yeah.
My buyer, he found the house. So technically, Cody, what? They don't really need me, right? Because they feel like, and I always tell people this, I am not here to help you find your house. There's this little thing today called the web. I don't know how people keep their job when they're looking for a house. Because on their job, they are looking for houses all day long. I'm like, dude, how are you getting your job done? They're like, we're not. We're looking for houses, right? So perfect example, my buyer, he finds the house. And remember, Cody, me and you having that conversation, like some people feel like, well, I found the house now. I don't need your agent. Dude, you never needed me to find the house. Chances are you're going to find your house because you're living, breathing, looking at houses, right? And we did do an inspection. He knew that much. But guess what? House had a mole. Now what?
Yeah, but I get that. But I mean, the guy he worked with me, and he do this.
You just trust him so much that you didn't do an inspection.
I think I did. I don't remember though, to be honest with you.
Cody, you think he did?
I probably feel like I didn't, but I think I did. I don't remember. It's been like what almost like 7 years ago. I
I'll
don't
say
remember.
how rare it is that a real estate agent does an inspection, or that real estate agent. It's almost always an inspection done, and then it's pretty rare that it doesn't come back with some type of renegotiation in favor of the buyer. Right? It either gives them peace of mind, number one, that hey, nothing's wrong with the house. Truly, that makes me uncomfortable. I'm going to move forward with it without asking for anything. I would say probably the majority of the time. Okay. There's going to be a renegotiation, either a lower sales price that happens because of it, or the seller repairing something, or giving a credit for whatever for that repair to be done. So an inspection, what is on average $600?
We're doing one tomorrow. Inspection came back. We're giving them $8,400 in credit.
For the inspection response.
Yep.
So it's the money, it's the best spent. But when you do it for sub owner, it's not a real, like, you don't know. So you don't do it. Like, I got to do an appraisal because the lender's making me do it. And the lender can still guide you through that process. But the inspection is just one of those things that is really pushed by real estate agents for good reason. And it's some of the best money you'll ever spend.
Bro, you know what's crazy though? I never said this, what I just say right now, because I thought about it a few times. It was crazy.
What you thought about what point?
What I'm about to say right now, I never said it before, but I thought about it a few times.
You sure you want to say that out loud?
Yeah. I don't think it was dumb, but I don't think so when he was buying the house and I tell him what price you want for it. And when I say whatever you feel comfortable as the price was, that's what I'm buying it for. He said me $220. I said that's it.
You said that?
I did.
God. Where's the camera at? Let me speak to everybody. Please don't do what Hector did. Here's the thing. I think this goes back
At
to
the time though,
But Cody, this goes back to what we said, relationships, right? You have a relationship there. You're like, I'm gonna be fair with the guy, whatever
that's
you
what
want
I
for
thought.
it.
I mean, at the end of the day, he wanted to sell the house. The man wanted to sell the house. I wanted to buy a house, and I come look at the house. It's nice. So I said, "What the price?"
I'll tell you this: on average,
And he was in my price range, so he said I think it was $220 at the time. I said like, "That's what you want." But I feel like maybe if I say wanted
It's
$210,
very rare.
I probably would have get it for $210, maybe $205, whatever the case may be. But I said like, "Hey man, if the bank approve it for $220 and that's what you want, he's good. I'm good. We're good."
he likes you. You probably said
He's a good. No.
So I feel like I could probably go through the transaction without a real estate agent. I've been doing this long enough. I'll tell you why I'd still use one. And that's because, like, if the other 20 didn't shoot me for not, because I deal with a lot of them. But if nothing else, that real estate agent can be a buffer between you and that seller in this case. All right. So, like, not that you guys are enemies, because it seems like you closed, y'all remained friends after the end. It was
yeah.
fine. That's definitely not always the case. So you guys might be more of an anomaly than the norm. But I feel that, it's an uncomfortable conversation to negotiate if you're not used to doing that with someone like, hey, I want $250 for my house. And you're like, I was thinking more like $220. You guys saw eye to eye on the value, but that's not always the case. So what could happen sometimes is that buyer can just move on down. You're like, well, that's what he wants. That's what he wants. And I'm just more than I'm willing to pay. But if you have a real estate agent, it then becomes, it's not emotional, it's not personal, it's business.
Yes.
Right. And so you can use that real estate agent to really just kind of vent and say, well, this is what I think. And the realtor can then have they have access to the MLS, which they can pull up all the houses and they can say, look, based on the age of your house, where it's at, square footage, all that stuff, this is what the house, like taking your emotions out of it, taking the seller's emotions out of it. This is the comparables of what homes have sold, and per an appraisal, it should be worth about that. And so it gives you some clarity, right? Of, okay, that if that's what the house is worth, that's what we need to tell them that's what we want to offer. And guess what? Your realtor gets to do that. And if he's rude and gets all ornery about it, you never know about it because the realtor gets to protect you. They're a buffer.
So a few things to that, but think about it like this, right? If you knew that I would represent you on a transaction, so your purchase of this house,
Yeah.
I come to you at no cost. Why wouldn't you use a professional? If you think about it that way, right? Because most buyers aren't going to pay our fees. Usually the sellers are going to pay our fees. Usually. Where all the, usually.
Disclaimer.
Okay?
Disclaimer.
So why wouldn't you have a professional on your side that's been doing this for over a decade and it's free to you? Right? And I'll tell you just from my experience, when I jump on a deal, I'm automatically saving you thousands of dollars. For one, we're less likely to pay that full price unless we're like in multiple offers. Think about it. Like, why would you pay him why? Why would you pay him full price? Why?
I already said, at the time, I thought that was the right thing to do. I just based it on.
That was really nice.
It was nice for coming from me.
How do you feel about it now? Like, do you look at it like, man, I probably could have got. What did the appraisal come back as? Do you remember?
It wasn't one. I don't even think if I did the appraisal.
You did.
No, you did.
I don't remember.
Your lender did.
I think it was probably
Okay,
like 225, maybe. I think
They probably just told him it was supported. Who was your lender again? Oh, that's right. You can't even
I don't remember
remember.
her name. I told you, I'm talking about names. But it was not the where he come out. I think wherever he approached the house from, that's what the money I gave him to. I don't remember, but I don't think he was trying to. I don't think he was. We cool like that, right? I think so. Until these days.
Oh yeah, you paid him full price. Y'all cool like that.
We're really good friend, but at the end of the day, I never look back on money and said, oh my God, I made for $5,000-$10,000 difference.
That's fair.
You know what I mean? I'm just saying, it's not like he was like a $300,000. He got me for $300,000.
Yeah.
It's just like a $5,000, $10,000.
So I'll tell you, dude, you're bringing up a good point. This is how a lot of people think, right? So you got a seller, he's got a price. You got a buyer. That sounds fair. I'm willing to pay that, right?
Yeah.
But then the appraisal comes back and the appraiser says, no, it's not worth that. You're like,
That was going to be the next thing I bring up.
Yeah,
it's
but
like,
I
well,
think
if you're willing to sell it for that and I'm willing to buy it for that, that is what it's worth. But the appraiser says, well, what we are going to go off of, and this is what our industry goes off of, is past sales, right? So we have to have, just like your credit is a history of how you performed with the bank.
Yeah.
The appraisal tells you, well, this is what the value of the home is. Now you can set a new benchmark, like, right, we're in free agency right now for the NFL. So you just had a wide receiver yesterday signed for like $40-something million a year. That is not normal. So what happened is he just set a new benchmark for future wide receivers that are coming behind, being like, let's go. Let's renegotiate my contract. I was expecting 28. Now I'll probably get 35,
Yeah.
$1 million. But so it's the same thing with appraisals. Like during those seasons when you have 2020 and COVID, where you have these multiple offer situations, you will have possibly an offer that is more than the asking price, right? Good for you as a seller. But what happens is that changed the comps for that neighborhood. So now the appraisal may come up. So it's a common issue that people have whenever something under appraises. It's like, man, I just don't get why that would be the case. Well, it's not saying that y'all still can't do that. It's just saying that based on to protect the lender and make sure that you're not paying more than what it's worth. All we have to go off of is what has sold in the past. So
I was so green though, because at the end of the day, he coached. I remember asking him. I said, "Man, this is my first time buying a house. How am I supposed to do this?" Even though like in the house, he was walking me through changing the filters and.
You talking about your coworker?
Yeah. So, but one thing about me though, when I don't know, I'm gonna tell you, hey man, I don't know nothing.
So were y'all
I'm
like
at
at
zero.
work one day and he was like, "Hey, I'm selling my house." Come
No, because
back.
I was buying a house. I was buying a house, and he told me about it, and I come show me. When I came in, he was really nice because I almost bought a house from another guy in Oak Park, because this is where I really wanted to buy the house. But then the price he gave me, I think it was under 200, and then they felt like they spent a lot of money in it, and they come back to tell me it was like 280. I like, no, I'm good on that. So then he said he was selling his house, and I come here, and I liked it. But I remember like when I said it, to go back, when I first bought the house, now at the time they didn't have the city water, it was those well water. How the thing works, what I need to buy, man, the level of anxiety was really high because, I was renting before. Just call the landlord, hey, do this and do that. But he said, man, just trust me. In 6 months, you'll be like a pro. Don't worry about it. He wasn't lying. He wasn't lying. I mean, now,
Tiffany.
shit, I fix everything in my house. I fix everything. I'm that guy. I'm him.
I'm skipping these because
Yeah, we pretty much
Cody
do.
doesn't do the business part, but I will ask you this because now it's short time and we can wrap up after this.
Yeah.
Okay. But what's the craziest? Give us some story time real quick. What's the craziest things you've seen with your buyers, your sellers? What story time do we have?
Oh yeah, people are crazy. I had a lady. I got 3 that come to my mind. One is too much. That's probably the one you don't want to hear, but that one ended up that was bad. So funny because these people are still alive. Is I had one. This lady ran over her husband. Yeah, she hit her husband with her car because his credit wasn't good. No, for real. Yeah, they couldn't get approved because he had income and his credit wasn't good. Hers was good, and he had stuff that she didn't know about. So
wait, they just call you one day and, hey, Cody, just so you know, I
just,
report everything else. I ran him over. That's what happened.
Yeah.
she hit him with a car.
Yeah. So,
And
hey,
he survived.
Yeah.
hey, babe, hey, look, stand right there. Stand right there. Tell me where I need to go. Start the car and just run the motherfucker.
So what happened after that? Did they actually
Dude, they were crazy. I was like, oh,
did they
I think
finalize the sale?
y'all are crazy.
Did they make a sale?
I can't remember if we closed that one or not. Can't remember if we closed that one or
I'm
not.
like- Cody.
One that really upset me was this is the first time I ever fired a client, which I don't do very often at all because I feel like I have a lot of patience doing this for as long as I have. It was towards the beginning of my career, and I wanted every person that would talk to me, I would do whatever I could to help them. And these people were, like I said, I take my time. I follow my dad's advice, undivided attention. So I'm got this spreadsheet, this worksheet that I'm going over with them. You just think it's a big purchase, right? They are just he's just shaking his legs and he's tapping the desk. He's hurrying me up. I'm like, man, do you guys have somewhere to be? And because it was awkward, it was getting frustrating because they were just like, yeah, we got it. You want to know where they had to go? Happy hour at Sonic.
At
Sonic. So half off their drink. And I was like, oh yeah, it is almost 4 o'clock. I was like, well, why don't you guys just go? Why don't you guys just head out? So that was.
I would have been like, yeah, go get us some drinks.
Hey,
I'll meet y'all.
I still think about that one today, man.
Hey, man, this dude, hey, I'm trying to think about the sound. This dude's right here talking about, hey, can we get to it? Sir,
Yeah.
Can we?
First of all, what you ordering at Sonic?
Dude, I know.
They gotta make the
Wait, you didn't get the order, Cody?
No, I was like, you know what? Why don't y'all just go?
No, go get me some happy hour.
I know.
shit.
Now I
And
would
then-
probably do it. I'd be like, man, what are y'all doing here? Y'all get going. We'll reschedule
That's
this.
crazy, man. You think, like you say, this biggest purchase of your life, but you worried about
Wait,
Sonic?
hold on. Was that their first purchase?
Yes.
That was their first purchase?
Yes.
Yeah, and then you worried about happy hour?
Hold on. You hadn't quite gotten to the pre-approval just yet, right? Or were they pre-approved?
That's what we were working on. We're working on
they
numbers.
wasn't going to get approved.
I mean,
That's what I tell myself.
it's
too.
just, you should have go get the happy hour first before you get to the meeting.
Right?
Look, they
You know?
wasn't gonna get approved. That's why they was like, look, we got to be at happy hour. We ain't getting approved, but we
Yeah.
ain't missing at happy hour. Not today. Yeah.
Oh,
That's good
man.
stuff.
And then I had one. Okay, so I did one. This is the scariest loan of my life. I did a loan for a guy. He was incarcerated for 10 years, and which is fine. Like, I've done that before, but we do have to have a job history, right? 2 years. We have to go back 2 years. So I had to go back like 12 years because of where he worked before, he was incarcerated. And so, long story short, I don't want to give too much away because I don't want to identify the guy because I'll be terrified he'll come find me. But he was very rude to me, my team, and I could tell it was fresh, right? It's new. And so, come to find out, he ended up actually killing his ex-girlfriend by chopping her up with an axe. This is no lie.
Wait, how'd you find this out?
It
Wasn't
was
in the
it was a
credit report
a friend of the realtor
that
said,
told-
I grew up where he's from. I know the story. This is what happened. And so, like,
So you scared?
I'm terrified that anything's going to happen. And then the loan almost got denied at the end. And so I'm like pacing my floor back and forth because this guy's like, he's going to kill me. He's going to kill me if I don't close this loan. So I told my company, I said, you'll have to close this loan. If he does not make the payments, I will make his payments for him. Please close this loan. We got it closed. Hey, he was even going to give me a good review. He was like, after it was all said and done, he texted me or he called me and said, look, he said, just for where I came from, I don't trust people. And I didn't trust you. He said, but here I am on the other side of this, and I just want to thank you. I'm sorry for how I talked to you and your team and blah, blah, blah. Because I had some assistants at the time. They're like, hey, we are not talking to this guy anymore. Like, he just talks down to us. He's rude. And I was like, well, let me get it done. I wasn't going to fire him because I was afraid he was going to come kill me and my family. So I was like, let me just do it. And then we got past it, closed, gave me a good review. Like, let's go. I was like, don't send me any of your friends, though, please. Keep your friends and family to yourself.
But here you go. Okay, look, one more question before we go, too, because you mentioned this, and I want to make sure people are prepared, right? So someone calls you and say, hey, I'm looking to purchase a house. What all do I need? Because, you just mentioned the 2-year history as far as a career job goes. So I come to you, hey, Cody, what all do I need? What are some of the things you're going to need and ask
So the
for?
checklist of documents is what we give them. It's a little different for everybody, but the majority of the stuff is like if you're a W-2 employee, meaning you don't own your own business, then we would do 30 days worth of pay stubs. So if you get paid every 2 weeks, just 2. If you're like a teacher, you get paid once a month. I just need 1 pay stub, 30 days worth. 30 days worth of pay stubs, last 2 years W-2s, and last 2 years tax returns. It's typically what we need. I don't even ask for assets or bank statements because those expire every 30 days. So I just look at them, give me an idea of what's in there, where you'd be getting your money from, and then we'll verify that stuff later. But everything else can just be on an application. That's the documents we require up front.
Well, you heard it here
Yeah.
first.
What is the? That's been my last question. And what is the thing you love the most about your job?
Like the story I shared with you, just helping people that think they can't buy a house. And then also, man, I just try to find every opportunity to just help people, like not just with their finances, but when people are opening their books and you're seeing their finances, their bank statements, there's like a wall that's immediately brought down pretty quick. So like anything that if they walked in with pride or whatever, it's going to fall pretty quick because you get to see you had a bankruptcy 4 years ago. Like, ooh, I didn't want anybody to know about that. And I don't judge people because, man, I got my own stuff. But like, I will, if you trust me enough to open your finances in front of me and allow me to help you, then with that wall, it just kind of like there's a vulnerability there.
Yes.
Where we can go a little bit deeper in the conversation pretty quick. And it cuts from surface level to like kind of get into the meat of an issue. And that opens a lot of doors for conversations, whether that's family. I mean, I just had a conversation about this guy potentially having to leave his wife or wanting to leave his wife or they were splitting or whatever. And I mean, sometimes you get to minister to those people too, man. So it just like really opens doors to have some deep conversations. And that's honestly, besides closing loans and making the money, I really love having those conversations with people.
Nice.
Is that old saying? What's that Jim Rohn quote, Cody?
The what?
You know it, Jim Rohn.
Oh, well, I know the one that I quote a lot is you're an average of the 5 people you hang around the most. But
There's another one. I know you know it. Is you can have whatever it is you want in life if you will simply help enough people get what
Get what they want. Yeah.
I think that applies to you.
Yeah.
Yeah, but thank you so much, man. I mean, I think it was a
Are you
really
crying?
good. I was laughing myself.
Well, thank you, Cody. Thank you for coming on the show.
thanks,
We
y'all, for
appreciate
having
you,
me.
and as
Yeah.
always, a good show.
Yeah, and thank you everybody. You know, if you feel like you enjoyed the show, you know, let us know in the comment, and then like, subscribe, and share it with your friends.
Oh, and Cody too. Tell them how they reach out to you
Yeah.
if they need to purchase or
Easiest
have
way
any
to do
questions.
it, my website, codyheard.com. So CODYHEARD.com.
And your phone number.
337-304-0400.
Thank you.
I'm on social media too. So a lot of ways to find me. All right, guys.
Thank you so much for coming to the show, Cody. Thank you a lot.
You know what I was thinking too? Like, because I'm going to start doing this.